Okay, GM everyone. Thank you guys for being here today. I guess some are still on the way, so maybe one more minute and then we can get started. So we made it relatively private, but if you have some good friends that you want to invite, feel free to send them a link.
Thank you.
Nice voice. Yeah, and yeah, it would be lovely if you can change your name to your name in your project or VC, so it's easier for us to orient. Okay, while you are doing the work, I will just get started. So hello everyone here. Welcome to the first Shard Dubai Demo Day online. This is Belinda Zhou from Sharding Capital. Appreciate you being here, inshallah, for a full 2 hours. I'm sure it'll be one of the best most rewarding ways to spend your time. Just some background, Shard Dubai is a flagship event by Sharding Capital. And Sharding Capital is a Dubai-based venture fund. We focus on like early stage project, but we invest globally. And we really focus on like empowering the quality founders from day one. So Shard Dubai is supposedly the first and largest native demo day in Dubai. And the event is mainly to showcase like quality project during our research, because we actually research like a lot of project, like maybe over 300 project from this year onwards. And we want to provide like quality builders, founders, the unique opportunity to pitch and also demonstrate their ideas and product in front of a very international audience. And Dubai is a hub. So because of our edge here, and we will be able to gather a lot of good VCs, good angels, and also like enthusiasts in the Web3. So yeah, we have invited quite a lot of like VC funds and also like subject matter experts and some government regulators to our events. So we will do like about several online demo days, and then we'll have actually one offline in Dubai this month. It's on March 17th. If you can make it, feel free to reach out to us. We'll extend you an invite. All right, so without further ado, I think we can get started. Just some housekeeping. So we have 15 like teams today, including some relatively OG project and then some emerging projects. And every project will have 5 minutes to demo your product or pitch your idea, and 3 minutes for Q&A. If you run over time, I have to kick you out of the stage. So it's a hard stop. So please make sure you manage your time properly. And we have like 15 teams, right? Like the first one is ZKX. So we'll have ZKX Edward to the stage. Feel free to like share your screen.
Awesome. Thank you. Thank you, Linda. All right, let's share the screen.
Can you guys hear Edward?
No.
Okay, Edward, maybe you can share something.
Hello. Yep.
Yep, now we can hear you.
Okay, perfect. All right. Well, thank you, Linda, for the invitation. It's great to be here. I see some familiar faces. For those who already know about ZKX, we'll give you some of the latest information. And for those who don't know, well, I hope that helps you get into our little ZKX universe. All right, let's get started. So as you can already see from the first screen, ZKX is a perpetual swaps exchange. And we do have some unique features that we think will be very interesting to showcase to you today. We'll go through problem solutions, a little bit on the architecture and where we stand today as well, and also give you a little bit of an overview and a sneak peek on potential future token distribution, as we are working on it now as we speak. All right, so our background comes from venture capital as well as crypto. We've been working in the tech industry for almost 20 years. We mostly focus on emerging markets. We were part of SOSV, which is a $1.3 billion venture capital fund from the US that has a very, very strong presence in Asia and Africa and so on. We were overseeing the Asia portfolio with over 200 startups. And one of these startups was actually BitMEX. In fact, we were the only investors in the cap table of BitMEX. So that gives us a lot of understanding of how perpetual swaps have, a lot of, product market fit. But we also saw that there's several other problems. One, there wasn't true decentralization in terms of the order book, while the AMM model has its own inherent slippage issues, as well as, high frequency trading and the inability most of the times to have APIs for institutions. We also understood that self-custody was important, while actually, having the ability to offer a UX that is very easy from a user's perspective. So you can onboard from multiple chains through fiat, on-ramps, and so on. And for that, we entered this kind of technical discovery journey 2 years ago, where we realized that, by working with ZK rollups and partnering with Starkware, we could actually, leverage account abstraction to build a next generation DEX. So ZKX is a multi-asset perpetual swap trading platform. It's built on the Starknet ecosystem as of today, which enables us to, leverage account abstraction to improve the user experience, replicate and compete with the user experience that a centralized exchange like Binance does, while actually being, non-custodial and fully decentralized. Now, you may see a term here that says DLOB. What do we refer by that? We'll go over in detail shortly. But in short, we have built a two-tier system where you have an on-chain application that allows users to trade with all the benefits of the ZK rollup, while actually having a decentralized cloud computation infrastructure behind it that powers all these features that to this day we cannot even have on L2, whether it's complex rendering on the front end or a highly scalable order book that can enable high frequency trading. So that is ZKX in short, and obviously it's going to be governed by a future DAO. The DAO smart contracts will probably open source as part of our current push to develop the Starknet ecosystem. So hopefully more and more projects in the ecosystem benefit from the Cairo smart contracts. All right, so moving on. As I mentioned, there's two key distinctions here. One is the DLOB, the data layer, and so on. Now, what does this mean? It means that effectively we have found a way to introduce a consensus algorithm that is optimized for arbitrary computation. So it allows you to, send any computation request to the network. The network will compute it, will verify it, will approve it, and then in the future will ZK prove it. And then you'll get the data back on chain with the certainty that you know.
Edward.
Yeah.
I have to.
Oh, that was fast.
Yeah. Thank you so much. All right, let's go into the Q&A session. So anyone, any questions?
Yeah. Can I ask?
Hi, yes, go ahead.
Thanks. Yeah, my question is how the liquidity is going to be onboarded to ZKX. Is there some incentivization mechanism?
Yeah, so we're working on a dual structure here. One is doing a fair launch of the token where we offer incentives to the community to come in and participate. You can check our CIP online. There's an entire set of bounties, quests, and so on. Now, that's on the user incentivization. On the market makers, we have currently quite a few market makers who are on our investor list. So we build strategic partnerships with them to power the liquidity of the order book from the start. And then we have a unique algorithm, which we're going to be releasing the technical paper very soon, which is already implemented into the smart contracts, that will offer and enable permissionless listing of assets in the future. And you can then incentivize those assets with additional rewards. So if you're a third-party DAO protocol, you can list a swap on our exchange and provide incentives for the market makers to come and start quoting prices.
Okay, thanks. Yeah, I have actually one more if no one have.
Yeah, go ahead, Bodan.
Yeah, please. Can you explain how the leverage, where the leverage comes from for actual user?
Well, as you know, it's a perpetual swap mechanism, right? So the leverage is in effect virtual. There's no actual margin being called, but there's a liquidation mechanism as well as the risk management smart contracts that ensure that the system is not in debt. There's several pools that protect and backstop the market, but in any case, the markets are isolated, so it's not. As you know, with virtual AMMs, there's been a tendency to blow up because there's been less backstops in terms of risk management. With the architecture we designed, there's several backstops, and effectively, there's also what we call deleveraging. So if the position is becoming a liability within the order book, and before we need to, call in the reserve funds, there will be a deleveraging of the position, so everything goes back to normal. So there are several systems in place to manage the risk in terms of the margin trading.
Okay,
Great.
okay, thanks.
Thank you, Edward. Quite impressive. Nice. Thank you so much. Next, we will have Damien from Drift. Damien.
Hey, can you guys hear me?
Yes. Great.
Cool. Okay, let me figure out how I can share my screen, and then we can quickly start. Thanks for putting this together, by the way, Blender.
You're welcome. Thank you, everyone, for coming.
Sorry, I'm a bit technologically illiterate, so things are a bit difficult. Can you see the right screen? I feel like you're seeing the wrong screen.
Okay, I'll be nice to you and give you 30-second extra.
Oh, thank you. Okay, I think I found the right screen. Let me know if you can see this properly. Can you see this?
Yeah.
Okay,
great.
yeah,
So
I see it.
I'll give a quick introduction to Drift. So Drift Protocol is the leading decentralized perpetuals exchange on Solana. In our V1, we did over 10 billion in volume in under 6 months. And our V2 was relaunched in December of 2022 as a full service exchange, which I'll cover in a little bit, but essentially just means that we offer a swath of new products that are designed to rival what a centralized exchange offers. We also released with a swath of new liquidity mechanisms as well to sort of address some of the limitations of our V1 AMM, and I'll go into those a little bit deeper as well. I sort of want to cover a few stats that we're quite proud of. The first is that obviously the #1 perpetuals exchange on Solana. But the second is probably, even though our volume milestone in V2 isn't as high as V1, but during this really deep bear market, we've seen about 200 million in volume traded on Drift. And about 95% of this trading volume is all retail volume, which is actually transparent through an open source dashboard created by one of our community members. So I think each month we have about 800 users. Each week we have about 800 active users. And of these 800 active users, only 50 of those are, I believe only 30 of those are making more than 10 transactions per day. So if we sort of equate high frequency trading with perhaps more informed flow, only about 5% of those users are actually probably considered to fall within that more informed flow category. Also the fastest growing DApp on Solana by TVL. And we're the only DApp on Solana currently with over 50% TVL increase in the last month. Solana has obviously had its share of difficulty post FTX. So we're very proud of these statistics, and we're happy that the tech stack underlying Solana has still been able to support our protocol to such a high degree. So I guess a part of our value proposition is the problem with sexes and perhaps why we're building a decentralized exchange. I won't labor this point too much, but I think with the recent bad actors, the continuous events that have been occurring throughout the year of 2022, and also the growing market of what DEXs are, it's pretty clear what the value proposition of DEX presents. DEX volume share in 2021 was 0.03%, and is currently at 3% of total market share in Q4 of 2021. So it's been an increase of 1,000 times, and we think that this trend will keep increasing, and we're well positioned to keep capitalizing on this. So how are we different from other DEXs, right? Like, what is our value proposition, and why do we redesign V2? The first is the idea of a full service exchange. So we think DeFi almost promotes users to fractionalize their attention, right? You want to borrow against your assets, you go to Solend, you go to Aave, you go to Maker. You want to speculate, you go to DoIDX, you go to Drift, you go to GMX. You want to stake, you go somewhere else. You want to do this, you go somewhere else. It almost incentivizes users to fracture their attention and move their money into different places. Whereas on a centralized trading experience, you can sort of use all of those products within one suite, under one umbrella. So that's sort of what we're redesigning Drift to be. We still, V2, have our perpetual swaps product. We also have our yield product, where users can stake into the AMM and can also stake into the insurance fund, where they can earn a stable yield and get a cut of the exchange's revenue fees. And also borrow lend. So users that deposit their collateral, they can borrow against the collateral, and they can use that to add to their leverage positions, or perhaps even with our latest product, spot trade. So Drift came out with spot trading just under a week ago now. Currently have, I think, about 4 or 5 markets, but it's another addition to our list of products that we're extremely proud of, as I guess removes one more reason for users to leave the exchange. But then underlying, I guess, all of this new design mechanisms is also the liquidity trifecta. It's what we're trying to rebuild with from our V1, which is purely an AMM product. So I believe ZKX previously flagged this, but AMMs traditionally do have quite significant design flaw issues, right? There's an issue of a long short imbalance, an issue of constant liquidity traded across the entire curve. A big problem with AMMs is it's very well designed for blockchain infrastructure, but it's not well designed for deep liquidity exchange. So what are we really doing to mitigate this, right? And what we're doing is we've implemented 3 new liquidity mechanisms. The first is a just-in-time liquidity auction. So this plays makers against each other. Every taker that submits an order on the exchange gets put through a 5-second Dutch auction, where makers can see the order and then submit a bid that's slightly better than what the user would get filled at if it was filled against the AMM. This provides a new source of liquidity that takers can sort of take against. I'll skip through the mechanism on this end, but that's a just-in-time. The second liquidity mechanism is our AMM. So that's very reminiscent of our virtual AMM from V1. But then probably our third largest liquidity mechanism that's the most innovative is our order book mechanism. So order book mechanism is powered by a network of keeper bots, and it's reminiscent of what a centralized exchange or a club design structure really is. Users submit their orders on chain. Oh, sorry.
David, yeah.
Oh, you do have to stop
so
me?
much.
That's okay. It's all good. We also have an order book mechanism on top of that as well.
Yeah. So now in the Q&A session, guys, feel free to ask any questions about the order book model, etc. Yeah, anyone, if you have any questions, feel free to ask Damien.
Yeah, please tell us more about the order book mechanism.
Dude, is that a mechanical voice? That is so cool. Yeah, great. Thank you for that segue. So our liquidity flow goes through 3 stages. It starts off with a just-in-time system, and if no makers come in within those 5 seconds, then it goes to the order book. So the order book functions very similar to what a club does. Users submit their limit orders on chain. A network of keeper bots then categorize all of those orders off chain into an order book-like structure, noting each order's trigger price. And then as that trigger price is reached, the keeper then fills that order on chain. And then that thereby lets makers step in and provide I guess, liquidity more concentrated around the mark price. And then if there's no liquidity within that range, then the order finally goes to the AMM.
Thanks.
Great. Thanks, Damien. Thank you so much. And then maybe we'll have the next project if no one has any questions. So next project we'll have VirtuSwap, and Evgeny will be the one presenting. Mic is yours, Evgeny.
All right. Thank you very much, Belinda, for putting this together. It's great to be here. And tell you a few words about VirtuSwap. So I'll kick off by basically following up on what Damien said in the previous presentation, and that is that there are a lot of deficiencies with the centralized exchanges design, with the order book, especially when centralized exchanges are not regulated. And DEXs are, in principle, a very nice, a very promising way to address all the promise with centralized exchanges. But currently, when we started VirtuSwap a year and a half ago, and now the promise of DEXs has not been fulfilled yet. And what we're trying to do here is we're trying to some extent to fulfill the promise of DEXs by developing what we think is the most efficient decentralized exchange, at least for a significant segment of assets. So when we think about trading in crypto, you can divide it into three different parts. The first one is trading between kind of the major assets. Think Ether or Bitcoin on the Ethereum network, as stable coins. The second part is trades between stable coins, and those two segments have been addressed well by Uniswap v3 and by Curve and whatnot. But then there is one segment of the market, the orange one that you see here, that has been quite neglected. And happens to be very large. And this segment is basically inefficient, indirect trades involving what we call the 99% of assets, right? So all the assets outside of the top few, the top 5, right? And indirect trades happen if there is little or no liquidity between two assets, and that happens all the time. Again, affecting something like 22% of trading volume just last year. And just last year, and just on Ethereum, that basically resulted in about $500 million of unnecessary extra fees and price impact that were paid by traders, and that could have been saved, right, with the different kind of technology. So what is our solution? So our solution basically comprises two elements. The first one is a completely novel financial engineering that I'm going to tell you, a couple of words in a second. And even more innovative governance of the protocol that is based on AI, right? Basically AI optimization of liquidity in the protocol, which I'm also hoping to tell you a couple of words about. So what about financial engineering? Without going into any details, right? The differentiator between us and pretty much any other AMM is that instead of looking at each pool separately, we have a system where pools are interconnected. So they basically share liquidity without sharing the risks, right? And that's a big kind of innovation. And basically, as a result, liquidity is multiplied by orders of magnitude. So before, I'll show you some numbers in a second, but before that, a couple of words on the AI governance. The idea basically is that we want to ensure that liquidity is put at any given point in time into the right places. And currently, liquidity providers are notoriously bad in kind of finding places to put their liquidity. So we've developed an AI system that basically takes all the information from the market on an ongoing basis in real time, such as trades, liquidity, fees, and so forth, and basically builds, optimizes the liquidity incentivization, right? Whose goal is to put liquidity exactly where it's needed most at any given point in time. So this is just the results of a very kind of complete simulation of the Ethereum ecosystem, right? Comparing, our pools, the rewards liquidity providers in our pools, relative to standard AMM such as Uniswap, right? Don't take Uniswap. I mean, that's not important. It's a standard AMM system. So basically, what we see is that the volume going through our pools that are comparable to pools in other, DEXs is about 2.5 times larger, and the fees are about 5 times larger than on comparable DEXs, right? When you combine the advantages of both the innovative financial engineering and this AI-based liquidity optimization. Now, this is the current state. Where we're going with this, or one of the places we're going with this, we're basically creating a decentralized optimization network that we call Minerva. The idea basically is that there are going to be basically players proposing optimization, hopefully better than ours, right? And there are going to be players basically executing this optimization, right? And also validating, the solutions. The idea again is that, collective wisdom is probably going to generate an even better solution that we are doing right now. And we're working on kind of the system of tokenomics to put all of this together and make it worthwhile for all three types of participants to do this. So just to summarize, and without the risk of running over time, what we are is, or what we strive to be, is for the 99% of assets what Curve has become for stablecoins, right? There were solutions before Curve. Curve is a better solution. So there is trading in the 99% of assets without us. With us, it's much better and high returns to LPs. Our logo basically is one trade, one fee, right? You never need to pay double fees and double price impact. That creates huge savings for traders, huge improvements in returns to liquidity providers. We're going live on Polygon within a couple of months, and you'll be able to all experience us live. Right now, it's possible to experience what we're doing on testnet and Polygon.
Thank you. Thank you,
Thank you very much.
Great. Good to know there's a good long tail asset that people can check out. Looking forward to the mainnet launch. Nice. Anyone got any questions for VirtuSwap? Feel free to go ahead.
Hi, Evgeny.
Yeah.
I do have one question. So can you share like a little bit more details on the optimization, like whether it address like only the liquidity and also like fees generated like for the LP or an eventual liquidity mining? Thanks.
So the optimization can kind of tackle different problems or any type of linear combination of those problems. Right now, we are optimizing the overall fees that are collected by LPs in our pools, that we basically choose. However, we can envision a situation where we want to optimize not just the fees, but also the trading volume, for example, going through us, right? Or again, any combination of the factors. Another thing that we can kind of optimize or minimize in this case is the overall trading costs, including the price impact in gas, right? So again, for the launch, we're focusing on LPs, just because this is kind of the biggest pain point. But after that, this optimization is going to be kind of versatile.
Okay, thanks.
Sure.
Yeah, one more question. Can you please explain maybe an example if I want to kind of swap token 1 for token X and there is no liquidity, where does the liquidity comes from? Is it kind of other assets of the pool?
Yeah, so I'll run the risk of Belinda cutting me off as I explain this, but I'll try. So basically what happens is that according to our architecture, every pool has a possibility to accept other assets, so the two main assets of the pool into the reserve. Using triangulation of other pools, in our system, we basically compute the so-called virtual trading curve. And trader trades according to this curve by basically sending the asset into the reserve of the pool and taking out of the pool one of the main assets. This is the first step, right? And that's what makes it basically cheaper for the traders. In the background, pools exchange their reserve assets among themselves, basically moving a reserve asset in one pool into kind of one of the two main assets on the other pool, and vice versa, right? So basically, we delegate the second step, right, to the pools, right, basically making the trades 50% cheaper. And the second step is actually much more efficient than the first because it doesn't involve any slippage, any price impact or fees, right? Just a little bit of gas, right? So that basically is what generates the savings in the costs.
Thank you, Evgeny. By the way, Evgeny is a professor from Israel. Also, they're coming to Dubai probably during ETH Dubai and Shard Dubai as well. Cool. Thank you, Evgeny. Then we'll have the next project. We'll have Roland from Phezzan Protocol. Roland, the stage is yours.
All right. Hi, guys. This is Roland from Phezzan Protocol. Again, we're another DeFi project, and we're an order book perpetual DEX that enables retail liquidity on ZK Sync. Right. So you guys may ask, we are the fourth project and the fourth DeFi project. Why another perp DEX? It's because we see something that's we think that's not sufficient enough in the current market, right? We will use those projects as examples. So firstly, DYDX, we think one of the best things about DeFi is that anyone can go there, provide some liquidity or some yield. You just can't do that in a traditional order book DEX, right? It's dominated by professional market makers. Then there's GMX and using oracles to execution. We think that among others, one of the problems with GMX is that they don't really support altcoins, right? For example, last December, someone manipulated the spot price of Avalanche and LPs on GMX took a hit. Then there's AM style perpetual DEXs such as Perpetual Protocol. One of the bigger problems for them is the impermanent loss for LPs. No one has solved the impermanent loss problem yet. We know we can, someone maybe in the future, but for now it's still an unsolved problem. From our point of view, order book is the most capital efficient. Market makers know how to cooperate with order books, but how can we have retail liquidity on an order book? That is what Phezzan is about. Again, we're an order book DEX on ZK Sync that allows retail liquidity. How do we do that? On a high level, we will partner up with professional market makers. Market makers will provide institutional grade market making strategies in an off-chain environment in a specialized hardware where no one can see their code. Then retail LPs, people like you and me, can provide capital into on-chain smart contract. Market makers can make markets using the retail's money on Phezzan's order book, right? Again, we're an order book exchange on Phezzan's order book. And the market makers will earn spread, they will earn trading fee rebate, and also some token incentives. In the end, market makers will share all those rewards with retail LPs who provide the capital to the strategy. For each market making strategy, there is a smart contract that's associated with it. Okay, so that's about market makers and retail LPs. Also, another differentiator about Phezzan is that we will be focused on all those hot coins, right? If people want to trade Bitcoin or Ethereum or Solana, they can go to Drift, they can go to DYDX, they can go to GMX. We want to be able to provide the same kind of depth of liquidity on that. But at the same time, if people want to trade Ape or Aptos or Blur, those perp trading pairs on chain right now, there's no good place to go. The liquidity is bad, or they will have a huge slippage. For example, if you go to Perpetual Protocol, putting an order of say Ape for $15,000, you're probably facing a slippage of 10%. That's just terrible trading experience. On Phezzan, when we launch our mainnet, we won't even bother in launching Ethereum or BTC, right? Again, we want to be able to compete with GMX or DYDX. Instead, what we will do is that we will make sure to have the best liquidity among all DEXs for those perpetual trading pairs. Not shitcoins, right? Those hot altcoins such as Ape, Aptos, Blur, they're constantly top 10 or top 20 perp trading pairs on centralized exchanges, but again, shallow liquidity on other DEXs. So unlike the friends earlier, we're actually raising a round right now. We're raising $2 million to support our growth into the end of next year. Our valuation is $20 million FDV. We have Delphi Digital as a co-lead. Other participants in this round include Continental Ventures, Beam Ventures, and Zero Run Node. By the way, one member from the ZK Sync team is also in this round as an angel. Yeah, I think I will be the first one who is not cut by Belinda. This is our information. We made this deck especially for this event. And yeah, guys, any questions?
Thank you, Roland. Very passionate and very on time. Great. So the floor is open for questions. Anyone feel free to ask away. Yeah.
So is the traders actually using the capital of professional market makers and retail LP providers for leverage, or is it kind of computed off chain?
Could you please repeat your question? I missed the first half.
Yeah. For leverage, is the capital of market makers and retail providers used, or is it kind of off-chain computation?
The capital is like the money is all on-chain, right? Because that's how retailers can feel safe. So you can see how their capital is used on-chain. Like the market makers cannot move the assets of the retail LPs off-chain.
Yeah, thanks.
Is there like any regulatory concern if everything is like done in an anonymous setup?
Yes, yeah, and one thing we could do is that we can have an AML and KYC solutions, right? For each, actually I can show you here. For each like a market making strategy, right? The market makers can set their requirements. For example, on how much like capital is required, how long do they need to lock? And also we can work with other on-chain KYC AML solutions. Like say if a market maker is concerned with the legal aspect, they can require for LPs to have KYC before they can provide capital.
Okay, that's interesting. Thanks.
Yeah. Ian asks liquidity for those also. How many market makers you need to make the liquidity enough to trade? Yeah, from our research, I think about $2 million of liquidity per trading pair should be enough for us to be the best DEX. Since we're on order book, our capital is much more efficient, right? So yeah, $2 million of liquidity per trading pair should be enough. Yeah, for Jake, how is our relationship with ZK Sync? One moment. I think that will be the last question I can answer. Yeah, and we chose ZK Sync because from engineering perspective, right? ZK Sync supports older version of Viper and Solidity much better than other ZK rollups. So yeah, we think for like any L2 to like be popular, you need to have all kinds of DeFi projects, especially like for RV, Lido, Uniswap, especially like RV and Uniswap, right? Their code is written in older versions of Solidity and Viper, so they are like already have proposal passed to deploy on ZK Sync or deploy on ZK Sync. We have good relationship with ZK Sync team. We have been building it for a long time. If you guys just go to crypto Twitter and search DeFi ZK Sync, like Phezzan is gonna be there. We are the first perpetual DEX on ZK Sync testnet. The ZK Sync team actually tweeted about that. So yeah, and we have a really good understanding of the ZK Sync community and also the culture there. I think that's my time, right?
Yep, that's right on time. Thank
cool.
you so much, Roland. And next we'll have Alberto from VyperProtocol. Alberto, stage is yours.
Hello, guys. Thanks for having me. So let me just remove this pop-up here. Cool. Let's get started. VyperProtocol. So hi, everyone, guys. So let's do like a little bit of an icebreaker with looking at these 5 trades. So we have a large cap trade, we have some altcoin, we have an event market, we have a pre-listing. This is actually Aptos in November before it went actually live. And we have some euro dollar with FX. So what all these have like in common? So they've all been traded and built on VyperProtocol. And actually something new, most of these are options. So, but what is Viper? So Viper is the everything store for derivatives, and we have been building around 3 main building blocks. Number 1 is the protocol. So we built our infrastructure with which you can create, trade, and settle any on-chain derivative in a matter of minutes. The second one is our product. So on top of that, we built Viper, which is our decentralized exchange, where essentially traders can go long and short with leverage on any derivatives on any asset. And why all of this is possible? So this is possible thanks to our unique modular infrastructure, which allow to open new markets on any product, which essentially has an oracle. And this can be done really in a matter of minutes. We have been building on Solana for 2022, and we're now expanding into EVM. And we have our private beta, which are live on BNB Chain and Arbitrum. So in terms of the traction, we have been live, as I was telling you, for more than a couple of weeks, and we got some really interesting numbers. First of all, people is excited about trading with us because of the variety of instruments and assets that we offer. So we got more than 5,000 trades, which have been created just in the last month. And we got like a lot of requests from top tier DeFi protocols like Ribbon, Fedora, and Cruize Finance to use our infrastructure. Furthermore, we have been very active in the space, receiving ecosystem endorsement by Binance and BNB Chain, and also by Wormo by Jump, as we have been among the winners of their accelerator and hackathons. So few words about the team, because at the end of the day, I believe that behind the technology, there is always the people which shape that. So is the 4 of us. We are all Italians, even though we're based in Dubai. So if you come next week, come and say hi. And we have been in the crypto space since very long time. essentially since when it was just Bitcoin and Ethereum mostly. So we have a lot of experience in crypto, been trading like on pretty much every centralized or decentralized venue, and also like on traditional companies. I was personally with Amazon on their tech side, while rest of the team was on the trading desk of banks like JP Morgan and Credit Suisse. So Viper is a plug and play platform which allow you to trade and create any on-chain derivative in a fully permissionless way. So our edge is really on the flexibility. So in terms of the payoff that you can choose, so not just vanilla options or perpetuals, but also more complex instruments. In terms of the asset, we can provide liquidity on pretty much every type of asset, of the collateral that you can use for the trade. It can be dollars, it can be something else, or on the duration. So it can be from very short position to much longer. And our edge is around shipping new products. So just in the last couple of months, we have deployed more than 3 different type of contracts. So vanilla option, we all know what they are, forward contracts, and binary and digital options on actually more than 41 type of assets. So why are we focusing like on options and on a lot of derivatives? Well, simply because derivatives is a much more efficient way to trade than, for example, spot and perpetuals. And this is because they are not just focused on speculation, but they can also provide you capital protection or passive income. And some example of the strategy and the products that we're going to release in the next couple of weeks are stablecoin depeg, impermanent loss, options on NFT, and more structured products like barrier and basket options. So how do we get the liquidity? We have a dual model, which is based on a request for quote system, which allow on one end to get orders from market makers and on deep liquidity. We have already 2 market makers which are like onboarded with us. And also like liquidity pools on which, for example, native tokens, even the tokens with like 1 million market cap, can provide some of their tokens and open option markets. So people is already like in love with us. On the left, we can see some great comments that we saw like on Twitter and our user growth with more than 1,000. And just for the last 15 seconds, I want to show you our new UI, which is going to go live. And as you can see, like it's super simple for everyone to have access to option strategies. Thank you.
Thank you, Alberto. Very right on time. Great. Let's enter the Q&A session. It's quite fun place. It's like a DJ playground. Anyone got any questions? Yeah, feel free to ask away.
Yeah. What actually are the assets supported for option trading?
So as of now, we have more than 41 assets. So we have the traditional altcoin market. So think, for example, Bitcoin, Ethereum, all up to the top 20, top 30. Those are markets where it's really easy to find liquidity, as we can integrate either with the third-party protocols or where market makers like are willing to quote. We are also like supporting other type of meme coins, shit coins, however you want to call them, which are like, for example, Bonk, Blur, Rollbit. So in this kind of setup, we have the protocol which is providing the tokens for having option markets. So like it's more like an AMM kind of style, which is optimized just for that specific type of token. And other assets that we can list pending regulatory like approval are, for example, FX, commodities, and stocks.
Great, thanks.
Great. I'm gonna ask questions for Ian because he has audio issues. So he's wondering how do you price those derivatives, Alberto?
Yes, actually, I mean, it's a very good question. So derivatives like are much more complex, to price, and that's why all the AMM like Uniswap style never work for derivatives, because of course, if you ask to 10 different market makers, they're gonna tell you 10 different types of volatility. So it's not like a fixed metric. So our RFQ model exactly solves that problem. So we outsource the pricing actually to the people which is really good like at doing that, and they do that as a job, which can be either market makers or people which is writing on-chain AMM. And all the pricing like is done on a token specific basis. So these allow us to scale because every trade in our platform like it's segregated. So it means that we never commingle the capital, for example, like GMX is doing, and so we can list a lot of different type of options, and all the markets can stay separate.
Got it. Thank you. Great. I think this. If anyone got any questions, we still have 30 seconds left. All right. If not, then we'll have Ilya from Plasma. Hi, Ilya. Thank you, Alberto.
Yeah, hi everyone. Yeah, it's very great to be here on one call with so many builders and cool products. So yeah, my name is Ilya. I'm the CEO and founder of Zero to Plasma Labs and Plasma Finance platform. We are a big platform for DeFi. We aggregate many protocols, and our goal is mostly an adoption for the whole Web3 market. So we've already in the market since 2017. Right now we have around 150 active users on our platform, and many partnerships with the different protocols that we integrating into our platform. So as you know, the biggest problem now with the centralized finance, it's that's huge scams where people lose billion of dollars. But also the DeFi is not still a perfect solution for the mass market. We still have a lot of complexity with the products. We have different risks and technical and liquidity, and in general, we have a lack of education for the users, like retail customers of DeFi. So we want to build one infrastructure for all retail users, where we'd like to aggregate all Web3 market, the different protocols and liquidity in kind of one-stop shop that actually Plasma Finance is, and help people to start using the DeFi with all tools that they need on this market. So actually we're building kind of decentralized finance platform, trying to provide users as many services and protocols as possible, doing a lot of integration with other partners, plus building our own protocols. And we moving pretty fast, like almost every 1 or 2 months, we deploy a new integration or a new product to the market, and our community and user grows very smoothly and organic. So that's our whole ecosystem. In the green boxes, you can see what products and protocols we've already built. We have a few applications for the users. We've built the DEX aggregator similar to OneInch. Now we deployed the Quadrat protocol, that's active liquidity management for Uniswap 3. And as many of you know, we deployed Uniswap on the BNB chain to open the more possibility for the all users from the Binance and BNB chain. We built different SocialFi features like portfolio management, messaging protocol, and other stuff. We've already aggregated all fiat on-chain providers, and our goal is to build this big infrastructure in partnership with many protocols and move all this liquidity on our own 0x Plasma L2 chain. So this year and next year, we plan to deploy 5 more protocols and products. Some of the projects we develop especially for Web3 developers that help them ship their projects faster and cheaper. And we also developed some new SaaS models for projects for raising the money. So it's a pretty innovative model when you can pack your tokens for your investors in the liquidity position and sell it to your investors as a NFT token with this position. So the investor will get finally, after all vesting schedule, their liquidity with the farming piece, plus it's improving kind of almost decreasing the sell pressure on the tokenomics, and also possible to set the target ROI for your investor. So if you're interested in this model, just contact me on the Telegram. We target a pretty big market because we're trying to build a perfect UI and UX solution in every field of the market. And the main target for all Web3 market is to go to 1 billion users in 5 to 10 years. So that's why we want to build this big infrastructure and looking for any strategic partners and protocols that have the same vision, so we can build together a 20 billion platform with 1 billion users in 5 years. So thank you very much for listening to me, and welcome to any questions.
Thank you, Ilya. Also very on time. Great. Anyone got any questions for Ilya, Plasma, or even Quadrant? Feel free to go ahead.
Questions. Okay. Yeah, I hope to see you all on the East Dubai.
Yeah. I have a question. You kind of present a broad range of different products, focus points. What actually is the value proposed for kind of general user? How to kind of how to use the platform to benefit from, to make some APR, to make some on-chain deals or whatever.
Yeah, so for the end user, it's just like one-stop shop. So they get a lot of products and protocols depending on what they're looking for. It's like the DEXs, breach aggregators, liquidity farming, all this stuff. Underlying, we integrated with different protocols. We also built our own protocols where user can provide their liquidity. For example, as a Quadrat, it's a liquidity, like active liquidity management on Uniswap V3, help people passively earn a very high APY on Uniswap V3, so they can provide actually their liquidity into Quadrat as a proxy world. And the Quadrat will be managed by the centralized relayer or with the rebalance mechanism. So that's one of the way how we gain the APY or gain the TVL of our protocols. For the DEX aggregation, that's mostly the transactions fee. And for the protocols that we're going to deploy in this year, it's also kind of different models that we implement in every type of product.
Got it. Thank you, Ilya. I think Daria got questions, right? Daria, feel free to go ahead.
Yeah, hi everyone. Sorry, I'm without camera today. Thank you, Belinda, for amazing hosting and Ilya for the presentation. Yeah, you just stated that you have a number of products and 150K active users right now within your platforms. Could you kind of tell me a bit more about some like paying customers within different products, or maybe some other metrics? Because like you showed the ecosystem, but it wasn't really clear like to see your business model. That would be cool if you can share some features around your products where you already make. Yeah, thank you.
Yeah, we're not making money on the protocols because our like first 2-3 years of the integration and implementation of different protocols, integration them all together, we target to growing the user base. So we mostly, and now it's only like organic user growth, so we don't do any marketing, etc. activities. So regarding the protocols, so every protocol has its own economic models, how it's making the money. Most of the protocols making money on the transaction fees. Some of the protocols making money on the TVL and revenue share with the users. So aggregating it all together is like one big business model that almost connect all these protocols together. That's our vision of the final business model. So the main goal is now to grow and become the #1 DeFi platform where a user can get any product or service that they need in the DEX.
Thank you very much, Ilya. Thank you for the presentation and answer. Thank you.
Thank you, Daria. Thank you, Ilya. Great. Next one, we'll have Claude from Mimo Labs. Claude, the stage is yours.
Cool. Let me try to find a way to share my screen quickly. What the hell is this?
Okay, while you're figuring this out, Claude, because there has been quite a lot of folks who sign up, and then in the future, if we want to make it easier for you to get access to the link, so we create a like TG group. So feel free to join there. So we can we'll post our future demo days and links there. So it's easier for you to get access instead of finding the link on your email, because there's been so many people DMing me about the links and stuff. I'll just ship the TG link in the chat. Okay, Claude, go ahead.
All right. It's telling me that I have to quit and reopen, so I'll be back in 1 second because of privacy settings.
No problem, no problem. Yeah, feel free to join the group and then can say GM from there. Yeah, so it's easier for you guys to get access. It's like onwards. Yeah, by the way, Bolden, really good questions. Yeah, we do have a lot of DeFi project in this demo day. Next one, there'll be more like other categories like SocialFi, LSD, RWA, etc. Yeah. Claude, feel free to let me know when you're ready to start.
Okay, can you guys hear me?
Yes. Yes.
Okay, I'm gonna share
Great.
my screen now. Okay, can you guys see the screen? Let me know if you can see the screen. I just want to make sure.
Yeah.
So I'm not. All right, cool. All right, I'm gonna start.
Cool.
Right. Hey, hey guys. Thanks for making the time today. I'm gonna introduce the Kuma Protocol, which is something that we're gonna release with the company that we're Mimo Labs. I'm going to start by telling a little bit of a story that gets told like every single like bear bull cycle. It's a story of real world assets on chain. Story that gets told a lot but never happens, and I'm going to explain you why. Like typically the people who like try to get into like tokenizing securities on chain are bankers or like really TradFi bigwigs. They essentially collect money and raise a lot of money by bringing everything on chain just because they do not often they do not really understand why we're bringing things to crypto, and it fails because of a lack of liquidity. Like we tend to bring things on chain because of ownership at first, right? Cryptocurrency is ownership of assets. Like it's about not having your keys, not your not your keys, not your money. And the third person saying that today is like, this is how important it is to all of us builders in the space. It's about transparency. It's about composability. Like we see cryptocurrency as programmable money, and everybody who has been trying to tokenize like securities on chain has failed at all those three things. So, I mean, this cycle is slightly different. We believe that because of the DeFi ecosystem, you will have like more like finance savvy and like really yield hungry people who are like not only here to trade, but also here for yield. You have like DEXs who like will replace for a lot of tokens, a lot of users, the regular centralized exchange experience. You have like something that prevented a lot of tokenized assets to grow on chain because they could not trade, because like centralized exchanges would not take the risk of listing them because of they were fearing the SEC. And like decentralized exchanges, by being decentralized, do not share this risk. So we're in a better thing, but we still need better teams to do that. And I believe that the team that needs to be building in this type of space needs like understanding the regulatory space, understanding of DeFi to be able to build this type of product, and of course have tech. And this is, well, exactly what we believe we are, at least in my humble opinion. This is what I believe the space needs to build this type of product. So let me introduce you to the Kuma ecosystem. Like we turn securities into like stable coins using like several layers. First, we have a regulated business that turns real-world asset securities into NFTs. So this is the business of Mimo Capital. We take an asset, buy it, tokenize it into an NFT, stays within our custody or one of our partners, but we have the right to it. We sell those NFTs. Those NFTs can be used by a protocol that we have built but do not operate. It's run by the DAO. And this thing can turn the securities into interest-bearing stablecoin equivalents. I say stablecoin equivalents because they're not directly stablecoins, but they behave like so. And you would wonder, like, why stablecoins? I mean, as the two first people who presented DEXs today would tell you, it is just like on typical AMMs, it's extremely expensive to bring liquidity to like volatile assets. The more, please apologize for my hand-drawn graph. I mean, this is not my forte, but at least you get the idea. The more volatility you expect from an asset, from a pair of assets, the more expensive it is to bring liquidity. On one side, you have like the 99% that the people were talking about earlier. And on the other side, you have Curve, which is like makes it very cheap to bring liquidity. So for every dollar spent in liquidity, the Kuma tokens get like 10 times the liquidity that you would get compared to volatile assets that are being tokenized. And in DeFi, everything is built for stables. So this is why we've been like that. And the first token that we're bringing is USK. It behaves like a dollar stablecoin that is backed by NFTs that are themselves backed by US short-term treasury bills. and it yields roughly 5%. I mean, we'll probably keep going given what the Fed is saying every month. And the token, the model is a rebase token. What do we mean by rebase token? I mean, this audience is mostly DeFi friendly, so I bet you understand. But simply, if you have 100 tokens today, you will have 105 at the end of the year if it pays 5%. It releasing next week, and the initial customers are like a public, like a VCs, wealth, and CFI institutions. All right, we're gonna do corporate bonds after that, and I'm gonna end because it's gonna be 5 minutes very soon. But well, simply we are making stable coins out of securities, and we have like a two-share model. Feel free to ask any question, and yeah, talk to me at claude@mimo.capital.
Nice. Thank you, Claude. Why the bear though?
Bear, because Kuma means bear in Japanese, and we built this product for the bear market. So so essentially it's like Kuma tokens go up. That's why the bear. Like it was really something that we decided to build in middle 2022, because in the bear market, and especially when interest rates are high, we believe that people, we observe that people want yield bearing assets. They want like fixed income as opposed to securities. This is why we decided to make a whole platform for fixed income products.
Cool. Interesting. Nice. Anyone else got any questions for Mimo Capital and Kuma? Feel free to ask away.
Hi, Claude. It's Loomdot here.
Oh,
I was
no
just
way.
wondering, so in terms of I'm guessing which entity is the one that buys the yield-bearing assets, and kind of how is the legals behind that? Like, what kind of ties the company towards the yield itself, I guess, like on chain?
Sure. Let me try to break it down. So I will go back to this. This chart is this little slide, if you can see, is where I can explain this thing the best. So we have Mimo Capital AG. It's a company regulated in Liechtenstein that buys securities. So everything that yields, let's say the treasury bills, it's in the custody. I mean, at least like under the rights of this company, and therefore it can issue an NFT. This NFT being like a representation of this security, minus of course some commission that we take, is therefore accruing the yield as well. So typically an entity that comes to us buys an NFT for 100K and can sell it back 1 year after for 105K if the thing was paying 5%. So the whole legal work and the regulated setup happens in Liechtenstein, where we are regulated under the Blockchain Act. Does that answer your question? Or do you want me to continue to how it works on chain?
Yes, I think the kind of like what ties the I guess physical to the virtual.
Okay, I'll go for the second part of the question. So once you have this NFT, if as I just established, this NFT is today worth 100 and will be in 1 year worth 105, what tends to happen, and what does happen in most securities, is that the price they trade for on open markets, like for treasury bills, is trades pretty much linearly and towards the price that they will have with their principal plus yield. So it is really worth like 100 at the beginning and 105 at the end of the year. Therefore, what we can do is use those things and sell it to a protocol. This protocol, I mean, it would be a third-party user doing that. This person sells their NFT to the protocol. The protocol then issues these tokens that are like essentially like representing fractions of this NFT. So as this NFT becomes more expensive, more stable coins are created, and they are created directly like outside in the hands of the customers. So this is how this thing is tied up, right? You have a smart contract that essentially ties all the yield that is kept inside the NFT onto the smaller tokens, because so then the tokens can all keep the same value. Instead of growing in value, they grow in balance. I hope that answers the question.
Thank you.
If I can follow up quickly on that, Belinda, do you have time?
We do not have time, but feel free to ask your questions in the chat, and then maybe Claude can also answer in the chat. Thank you so much.
Thank you.
All right, you will not be able to hear my voice for the question, but thank you. I'll talk later.
Great voice. Thank you so much. Next, we will have Cruize Finance. Samath will be the one presenting it. Samath, the stage is yours. Thank you. Hi, Samath, we cannot hear you. I think you are muted.
Yeah, sorry about that. Yeah, thanks for having us here. Just to briefly intro about Cruize, we're building a principal protected structured products on chain. So to start off, we know that one of the biggest narratives in the market has been, like if you're holding a volatile asset like ETH or Bitcoin, you basically have two options to generate income on it. You either have safer strategies like lending, but we all know that, because of the historically underutilized rates on these lending pools, the rates have basically underperformed even, treasury bills. And then you have the riskier side where you have, like liquidity pools, but they bring the risk of impermanent loss. You have yield farms, which use a lot of leverage and expose you to liquidation risks. You have options walls, but they essentially take the short side of the trade and expose you to, virtually limitless losses. So we're basically building principal protected structured products, which enable user to preserve their capital over the long term while also generating a healthy revenue stream on their assets. So it's a very simple workflow. Users can deposit their assets in the wallet. We are able to generate up to 15% APY to our structured product strategies. All the while the capital remains completely protected. So we're essentially working on a full product suite that enables investors to have any kind of view, whether it's bullish, bearish, whether they have higher risk preferences to get higher risk return, payoff. So we're also building a fully bespoke interface for institutions where we are able to offer completely custom structures, flexible tenures, customizable strikes. We are integrated with onboard, on-chain passporting protocols like Polygon ID, Quadrata. We also provide like full counterparty transparency through our integration with Credora. So the opportunity we are looking at is, we have DOVs that are completely consolidated on chains like Ethereum, Solana. So fast-growing chains like Arbitrum are largely untapped. That is where we are seeing a lot of opportunity. And because of the recent drawdown, the importance of principal protection has been reinforced. That is a major theme that has come up in terms of investing assets. And we have seen, because of the lack of safer income opportunities on assets like Bitcoin and Ethereum, that has led to a lot of shrinking capital. That is something that we are poised to address through our protocol. And in terms of the competition, we have Ribbon, which is a major competitor, but they mostly focus on, vanilla option selling. And because you're selling options, you're basically exposed to, unlimited losses. In fact, they have underperformed historically, and they do offer some partial protection on assets like USDC and ETH. We have Sega, which is completely, consolidated on Solana. So they do offer some wallets that offer partial protection. And we also have Jones, which is based on Arbitrum. They're, working on simple option selling strategies. So we have seen a lot of traction. We did a private beta campaign recently, got a pretty overwhelming, interest from our community. So the revenue model is based on charging performance fees on the interest that we're able to generate. And since these are principal protected structures, we don't have to worry about negative returns on capital. We're also working with protocols like GainStraight to create, co-branded wallets. So they already have around 40 million in TVL, which we can see how we are able to generate boosted revenue for their, gains investors. So we are also working with Camelot to create, wallets to boost income, the interest on their LP tokens. So in terms of our roadmap, we currently are sitting near the mainnet launch. We are working with the Arbitrum team for a launch. They're basically helping us with launch support. And we're also going to work with Polygon Optimism in terms of our community events starting in the next quarter. We're also working with the Perpetual team to perform research on impermanent loss. So we're going to come out with an impermanent loss protection wallet, which basically helps users, reduce impermanent loss on their LP positions. And also happy to share that we are part of the Avalanche Institutional Network, which basically puts us in direct exposure to their institutional user base. This is an exclusive enterprise network that they are working on. And just to share a bit about the team, we are a team of PhD quants, engineers, designers from companies like Google, Bioeconomy. We have advisors like Roberto from Messari, Ben from Parallel Finance. And yeah, currently we are doing a private round. So to provide more details on that, we're raising around 3.4 million at 20 million valuation. And yeah, thanks for your time.
Thank you, Sama. That's also very on time. Good job. Nice. Anyone got any question for Cruize Finance? Feel free to ask away.
Yeah. Can you please explain how the principal protection works? Because it's kind of a really cool feature.
Yeah. So basically, principal protected structured products, like this is something that's pretty common even in traditional markets. So we have banks like JPM offering them on stocks like Tesla and Apple. But just to give you a brief overview of how it works, essentially what we do is we provide the capital to the market maker, who basically provides us a base interest of around let's say 5% annually, and then we use a portion of that to buy exotic options like barrier options. And because they're barrier options, they are much cheaper than their vanilla counterparts. And because we are taking the long side of the trade, we are also exposed to the volatility of the market. So as the market goes in either direction, we are able to capture healthy APY.
So as I understand, the principal protection works till the expiration of the pool, not kind of at the moment.
So we actually run the trade on a weekly basis. So we buy weekly options, and it's essentially since we are not selling any options, that doesn't expose the principal to any risks. We generate a base APY first and use a portion of that to buy options. So basically, the principal in a sense remains untouched, and using the APY and the exotic options, we are able to get exposure to the market volatility.
Yeah. Thanks.
Yeah, thanks. Great question.
Great, thanks, Sama. I think there's someone in the.
Yeah, I've provided an answer to the question.
Oh, okay.
Yep.
Great. Anyone else got questions for Cruize Finance?
Yeah, okay, maybe one more if no questions.
Nice. Go ahead, Boden.
Yeah, do you have any kind of revenue share mechanism for token holders for the future token, of course?
Yeah, we are working on our research is focused on the tokenomics, where we have a escrow token that provides benefits like revenue share, boosted revenue, boosted yield, as well as some exclusive rewards that offer higher APYs. So yeah, we have that in the plans.
Sounds great.
Yeah.
Okay, thanks.
Okay, great.
Okay,
Thank you, Sama. Next, we will have Patty from MeStar. MeStar, feel free to start.
Can you hear me?
Yes, we can hear you, Patty.
Oh, awesome. Okay, let me share my screen. Okay, can you see my screen?
Probably give it a second. By the way, I know it's a DeFi heavy demo day, but MeStar is not DeFi. Finally.
Yeah, something new. Okay, can you guys see my screen?
Yes, maybe you can start
showing
like a slideshow or something. Yeah, so we can see the full screen.
Right.
Yeah.
All right. Okay. Hello, everyone. Thank you for having me. I'm Patty from UPenn Labs. I'm excited to introduce MeStar here. MeStar is a 3D sandbox metaverse based on a self-developed voxel game client and committed to providing NFT finance creation and game exploration for both Web2 and Web3 players. We have released the Alpha 0.8 game client on our website. Since rolling out the loyalty program, our user base has grown rapidly. We now have over 48,000 verified accounts, and over 38,000 of them have connected their wallets. Our on-chain assets have been claimed over 91,000 times. We have over 100 Web3 partners and the Web2 influencers collaborating with us. Our player community on social media platforms has over 100,000 members. MeStar is composed of 5 modules. We have accomplished the first 2 modules in December 2022, which includes a self-developed 3D sandbox game client, which is free to download and play for both Web2 and Web3 players, and a set of innovative tools to streamline creation and import Minecraft maps or on-chain assets into MeStar. In early this year, we rolled out the long-term loyalty program, including point system and 5 utility NFT collections. So users can earn points by publicized behaviors, such as inviting new users to MeStar or sharing MeStar campaign materials on social media. Actually, today is the minting day of our MIA PFP NFTs. Holders can accelerate their points earning and will be able to apply the PFPs as their in-game avatar in the future. Players can claim low-level land NFTs for free and upgrade the lands with their points. They can also mint in-game objects into NFTs and list them on OpenSea. Business managers can also build and run third-party metaverse based on MeStar World NFTs. Holders can lock up market liquidity of an NFT combination to increase their mining hash rate of the Star coin, which is planned to issue in the second quarter of this year. By the third quarter, we plan to launch the 4th module, the MeStar Metaverse. It will be the first game server where players can earn and spend the Star coin. To stimulate players and keep them entertained, we would highly emphasize fan-first principle through popular game modes, such as lottery ticket, PvP game like Pixelmon, or coin mining in game version. Everyone is welcome to join, but holders of MeStar assets would enjoy better odds to win. Apart from the official MeStar Metaverse, we support project managers and community organizers in quickly building up a visible context in MeStar to facilitate their narratives. And in return, we can collect the users' traffic from those projects and communities. Currently, we have already reached a collaboration with dozens of projects, such as PFP or IP promotion projects without a technical team or product. The MeStar project is presented by Uplan Labs and led by the former operation team of the largest business server of Minecraft in Asia. Our product partner has been working in the crypto space for 7 years. And we now have 12 full-time members with the R&D team in Asia and 2 co-founders based in Hong Kong and Los Angeles. Our first funding round was led by Collab Currency and Synergist Capital, with continued investment from UB Capital, Max Network, Formless Capital, and Catcher VC. We're now open for a new funding round to collect money for the upcoming marketing campaigns and to provide solid support for the NFT market making. Currently, we are going through the final process of having KuCoin to lead this round. Yeah, so this is a quick briefing of the MeStar project. Please feel free to ask me anything, or you can also reach out to me later. I'll be thrilled to introduce more information. Thank you, everyone.
Thank you, Patty. Great. Nice. Anyone got any questions for MeStar? Feel free to ask away.
Yeah. Can you please maybe explain the differences of the token economy from kind of existing solutions like Sandbox and other metaverse projects? Because we kind of saw that the hype driving around the metaverse projects is kind of more driven by the value proposition to earn some tokens, to spend those tokens. So is the kind of supply of the token inflationary, deflationary, maybe kind of new models?
Mm-hmm. Yeah, so first of all, we try to find a balance between the GameFi and NFTFi. That's why we roll out this loyalty program. We have 5 utility NFT collections. So first of all, those NFTs are functional and applicable in our MeStar game. So in the future, they can either hold the NFTs to earn something else, like the extra benefits, or they can actually use the NFTs in the game. For example, they can use the PFP in the game as their in-game avatar. They can use the land NFT in the land gameplay. They can also mint the NFT as the blueprint NFT. So there's a lot of functions of those NFT collections. And secondly, we so compare with those notable projects such as the Sandbox. One of the biggest difference is that we would highly emphasize fan-first principle, and we hope to retain users with exciting gameplays. So players can actually play in MeStar instead of just wandering around in a world of billboards. So meantime, we don't refuse Web2 users. Instead, we carefully shape the product to minimize the friction for onboarding Web2 players into MeStar. Players without crypto wallets can sign in with Gmail or Apple ID, and they can also participate in the events, starting by completing off-chain missions and claiming off-chain rewards on our website. So we can take advantage of the new technologies of Web3 and the big user volume of Web2 at the same time. And on the technical side, we also we build our servers in the distributed systems architecture, which means we can increase the server capacity as needed. So the server delay caused by a large number of players, which is quite frequent in other platforms, will not occur in MeStar. And this quality can assure us of a greater space for the future development. I hope this answered your question.
Yeah, sounds interesting.
Thank you.
Thank you, Bowden. Thank you, Patty. Great. Thank you so much for your presentation. Next, we will have Junshu Guo from Elven. Junshu, feel free to start.
Okay. Hello, everyone. I'll share my screen. Please click the screen. Thanks. Yeah. And Elven is the #1 financial reporting and compliance platform for cryptos. What we are providing are the financial statements for crypto assets. And I'll show you a demo. What we are leading is only for the wallet address. Once provided, we can generate the balance sheet, the income statement, and the cash flow statement. As you can see, for each account, we can expand to see the underlying tokens. And for each number, we can click and see what's happening behind this event. So sorry for the internet. Yeah, and we can see the credit and the debit, the opening balance, and the closing balance for each account and for each event. And the same for the income statement and the cash flow statement. Yeah, and we processed the transactions from the on-chain wallets, and we labeled them into standardized events. And we record the historical prices and the gas fees, and we go to our compliance engine to generate the general ledger. And we will try to get the trial balance, that is the total debit equals the total credit, exactly the same. And for each account, we can expand to see the underlying events. This is our product, and I'll give you an introduction of our project and the team. With tightening regulations, the need for corresponding financial compliance solutions is urgent because of system incompatible rules inconsistent, operators unqualified, and stakeholders FUD makes financial transparency the most urgent demand. And what Elven provides is a financial reporting solution. Our input is the wallet address list, and we do the automated processing, and we provide configuration for the project. And what we deliver is the financial statements, and it's auditable later. What we need is for 1 week to provide the demo, and 1 month to give full delivery. And we have the full financial compliance engine and accounting automation process. We can generate financial statements, the fund report, and the tax report for different cases. And we provide on-demand additional add-ons for internal control, auditing, BI, and ERP integration. We also support for the on-chain and off-chain syncing. We can add wallet, add exchange, and upload the CSV to generate our transactions. And this is our GAAP compliant rules engine. And this is our automated accounting process. And for the market, we project it will be $12 billion by 2030. And this is a competition landscape. And what makes Elven different is our compliance engine and accounting automation. And the comparables PS multiples is around 70 times. And our team is the combination of serial entrepreneurs and financial professionals. And our major planning is to scale in the first half year and to get a full alignment with the regulations in the second half year. And we forecast our SaaS revenue to be $142 million in 2030. This is our projections. And we are right now raising $4 million for our market expansion and R&D of our compliance engine. And that's the full introduction of our project, Elven. And thanks for all. And if you have any questions, we can discuss in detail.
Thank you, Guo. Thank you. I saw Darius interested. Darius, feel free to go ahead.
Yes, thank you very much for the presentation. Interesting product, I think very like with a high market need. Can you kindly share with us like your current pipeline, how many clients who you are targeting, and is there any like specific regulation perspective, like and what your current target markets, and is there any differentiation between the markets that you are planning entering in the second quarter 2023?
Okay, and this is our client pipeline, and you can see the evolution and Pomodoro are our customers, and they're paying for that. And we have around 20 customers asking for the service right now. And our clients is categorized as the centralized exchange, the projects, and the DAOs, and the token funds, and some DeFi protocols. Yeah, and they comes from the Singapore, Hong Kong, US, Korea, and in Japan. Yeah, and this is our customers. And we are planning to collaborate with the Hong Kong and Singapore government to get to the crypto accounting regulations. And we are going to get the partnership with Big Four in the second quarter.
Thank you. Thank you. I would love to follow up. Thank you, Junkyu.
Thanks.
Great. Nice. Thank you, Jinshu, for the presentation. If there's no other questions, we can move on to another startup. Thank you, Elven. Thank you, Jinshu, for.
Thank you.
Nice. Next, we'll have DAuth Network. I guess I haven't seen DAuth. Maybe you are amongst the crowd. Feel
I'm
free
here.
to.
Yeah, we're here.
to-
Sharing my screen.
Hey, Michael. Hey, nice.
How are you?
Great.
Can you guys see my screen?
Yes.
Okay, great. So I want to start now so I don't waste time. But basically, the DAuth Network, anonymity for the next generation of Web3 users. We realize that as Web3 continues to evolve, the next generation of users will face a lot of challenges in engaging with the ecosystem without the convenience of social accounts, as a previous project talked about. And we realize that the system needs Web2 functionality that keeps the underlying system decentralized. Also, people want to use social credentials instead of having to like save or memorize seed phrases. And finally, we want to provide a smooth and seamless onboarding process for Web3 applications, which we're currently missing. So what the DAuth Network is basically a privacy preserving layer for the next generation of Web3 users who want to rely on social account authentication or login and social recovery. The system will be trustless, would be verifiable, would be private, and fully decentralized. You can see here in the diagram that usually people use the DAuth protocol and the SMTP protocol to either like authenticate or send emails. What DAuth did is like grab those protocols and made them to another level that people could interact with Web2 and Web3 at the same time while being completely anonymous. So if you could see here on the right, we have Web2, whether it's sign in, it's like SMS or emails. And on the left, we have all the Web3 dApps. And our goal is to go from Web2 to Web3 by providing decentralized authentication to different protocols, and will enable protocols to authenticate their users or their social accounts or even phone numbers by leveraging knowledge technology. And then we have decentralized email or SMS, which enables the protocols and dApps to send emails to the users without needing access to their emails or phone numbers or all like any other information. So marketing strategy and partnerships. We've talked to a bunch of protocols here, basically building like these partnerships one-to-one. Clover Wallet, Lit Protocol. We're closely working with them. Also, Project Galaxy, Cloak. We're gonna hopefully integrate with them. And then finally, Pocket Network. We're looking to some ways to like provide their needs, but basically we could reach all these protocols that really want to have this private and anonymous authentication flow and offer that good user experience, and at the same time be decentralized and completely private. So our roadmap right now, we're building the SDK. In Q2, we'll like kind of continue with our pilot program and integrate the SDK and dApps. Then hopefully go for mass adoption and have 50 dApps integrated with our SDK by Q3. Finally, in Q4, we're gonna release a test network and Q4 release the test network, and then the decentralized network to release our tokenomics program. So we're raising 1.5 million at a $15 million valuation. We're using that for product development, marketing, customer acquisition, operation expenses, and legal expenses. So if you have any questions, I'd be more than happy to answer them.
Thank you, Mike. Great. Anyone got questions? I guess Bowden want to start.
Yeah. The project sounds good. Kind of digital IDs, kind of the next generation of the protocols we're likely to see and for mass adoption. And I'm interested in actually what is the value of the token in this ecosystem of the project? Is it some kind of decentralization of the network or what?
Correct. So we're gonna launch our token, and I didn't like put it here because of time, but we're gonna launch our token and we're gonna use it as like a payment model and decentralization of the whole protocol, where we could like just build smart contracts and let the protocol run in this way, and people pay for the service and get rewarded for providing the service in the native token. Kind of like what Chainlink does.
Is it kind of the paid subscription for user to kind of use the services of the protocol?
So there's two ways, either a pay subscription or a like pay per authentication. We're still looking into that, and we don't want to like just like make it like a crazy projection. We have those different like thoughts in mind, either to make the like pay per subscription, like a monthly fee for a protocol, or just like kind of like a streamlined, like every time you have to stake, and then every time you provide like an authentication, part of your tokens get burned.
Great, great. Sounds like a good revenue model for the protocol.
Thank you.
Nice. Anyone else got a question for Mike, DAuth Protocol? All right, nice. Thank you so much, Mike, for the presentation.
Thank you.
Appreciate it. Next, we will have Sam from MetaPioneer.
Okay, hi everybody. Let me just share my screen. Okay. So yeah, thanks everybody. Good to be here. My name is Sam. I'm project manager for MetaPi. So MetaPi is the next generation NFTFi product that we launched back in Q4 2022. So we're a team of about 20 plus full-time employees working around the world to onboard the next wave of Web3 users. So the two main problems that we're focusing on, the first one being limited utility for the NFT market, and then the second one being a difficult price discovery process for those NFTs. And so we're really focusing on those problems and addressing them by building a gamification of DeFi essentially. So it's a lending protocol that provides sustainable yield, but we've gamified it in a way to kind of onboard early users to Web3, and it'll help them learn about the whole Web3 space while giving them sustainable yield. And so that sustainable yield they can project out and help with the price discovery of the NFTs. So I'll just skip these next two slides and kind of get into sort of the background. So the background of the storyline is it's kind of like an interstellar storyline, like a Star Wars theme. And so there's several characters in the game, captain, first officer, crew members. And so these characters are essentially recruiting what we're calling a prospector NFT, and the prospector is what's doing the actual mining of our native token, NPI. And so, you can go up and down in the ranks depending on your contributions, but the captain, they obviously earn the most of the fleet team's rewards. The first officer is kind of second in command, and can be promoted to captain depending on their contributions. And then there's crew members as well. And so these fleet teams are essentially recruiting the prospectors to do the mining. And so there's tons of sort of in-game utility for the MPI token. So prospectors can, buy these mystery boxes, they can buy these trip upgrades. And so there's, and this will increase their efficiency in mining. So I guess the business model is, the users will enter the ecosystem by buying an NFT, and then the USDT that they use to buy the NFT will go into the vault, which is where the interest protocol is actually earning the yield, and this is what we're using to kind of generate that sustainable interest. And then that interest is given back to the users, and also a portion to the treasury as well. The tokenomics, So we have the majority going into mining pool, 70%. And so, this is what's sustaining our business model. And the team we have at a 4-year linear vesting. So, we wanted to make sure everybody knows that the team is in it for the long haul, not just, a short-term project. So, that's what we have for the tokenomics. I guess for the roadmap, a couple of key highlights here. We've started building about a year ago, and then we've gone through 2 security audits with TechShield and FairyProof. In Q4, we actually launched a token. We did a fair launch on PancakeSwap, and also the Prospector NFTs. We opened them up for sale as well. So this year, very shortly, we'll be getting listed on a centralized exchange. If not this month, then certainly in Q2. And then throughout the year, we have a bunch of, new features and functionalities that we're going to be integrating into the product, including the compound interest vault, the NFT marketplace, and things like that. So yeah.
Thank you so much for the presentation. Time is up. Great. Anyone got questions for MetaPioneers? The interesting project.
Yeah, what is the interface of the game? Is it kind of the card game? Is it kind of 2D based game?
It's actually, so this is the actual DApp right here.
Yeah.
Yeah, so it has kind of, this is my NFT, and then it has all of the, the attributes, the health power. You have to buy mining passes, and each pass is 1 day. But yeah, so that's pretty much what it looks like.
Great.
So yeah.
Thank you so much. Thank you, Sam, for the presentation. I guess if no one have any questions, we'll move on to Ondefy. So Gauthier, feel free to take over the stage.
Hey everyone, nice to meet you. Thanks for having me, Belinda. All right, let me share my screen. All right, we good? You guys see my screen?
Yes.
Cool. Yeah, so my name is Gauthier, and today I'm going to present you on DeFi. So we're a super app enabling DeFi for all. But before I dig in, let's try to zoom out and see today where we are at, people here in this meeting in terms of the whole world. Eventually, we are really knowledgeable. We know a lot about how crypto and on-chain complexity works, but most of crypto users don't know this, and also the rest of the world as well. So let's try to understand what is the typical user journey of a crypto user. So in most cases, someone will start doing some research online, talk about it with some friends. And then once they get really interested, they'll go on a centralized exchange, try to buy Bitcoin, Ethereum. And then at a certain point in time, those users, they will want to access a token which is not on a centralized exchange. And in this case, there's a breaking point. There's a loss of users. Why? Because it demands technical knowledge and time to access those on-chain tokens. And this is where we come in. We provide a simple solution for anyone to access any token directly with fiat. We also provide a super app where people can access the best of DeFi in one single place. This is interesting because today the DeFi market is pretty fragmented. And eventually there's users like us, as you can see in the upper right, which understand the on-chain complexity. So this is not for us. So today I'm going to run you through a quick demo and show you how it works. So you can just come here, connect with MetaMask, or if you don't have a wallet, you can create one with Web3 Auth. You can select your currency. So I'm in Switzerland. I'm going to select a token on Gains, which is called Gains Network. And was interesting because back in the days, this token was only listed on a DEX, so not really accessible for most retail users. But with us, it would have been very simple for them to directly buy it with fiat. So how does that work? User will sign a permit function, which will enable our smart contract to swap those USDCs into the desired token. So the user just has to put in his credit card number. And once the USDC is received on the wallet, we swap the desired token, we pay for the gas fee and find the best liquidity and the best price for that given asset. Once a user has bought his token, he can view his assets on our main app. So he just finished the transaction and then he can just click on view his assets. He can come here and he can simply view all the assets from all the chains that we've integrated. So we've integrated 8 EVM chains. We also have our own MetaDex aggregator, and user can also generate yield. So we say you have these assets can generate yield on. And yeah, you also have this marketplace where you can, just discover different types of tokens. We have around 10,000 tokens from the CoinGecko API integrated. So here I'm looking at Ondefy Finance. I like it. I want to buy it. I'm just going to put in a certain amount of ETH I want in order to swap that specific assets. So for now, we have, the wallet view, the swap view, and also the yield part, but we're going to leverage more services later down the roads. So as of now, we've ran an open beta with 4,000 users. We've done around 500K volume. We received a lot of feedback from this, and now we're improving and building the platform even more. And we'll probably have a launch in 2 to 3 months from now. So we've also launched an NFT collection that will give reduced fees and liquidity boost on the platform. And we're also working on another collection in order to provide quests and different types of incentives for users. So we're working as of right now on the ramp enhancer, making it simple for people to integrate this as an iframe on their project to make their token accessible for their users. And then we'll leverage account abstractions even more and also add more DeFi services into our super app. Eventually, we're going to take in convenience fee on all these services. And yeah, our team is based in Switzerland. Most of us have deep knowledge in the space, and we are from big universities here in Switzerland. Hugo has won 2 times the ETH Global, and some of our team are really deeply routed into the DeFi French ecosystem with Julien Bouteloup as our advisor. We are raising 2.5 million to bring DeFi for all, and these are the people that are backing us and supporting us every day. So yeah, let us know if you have any question, and thanks for your attention, guys.
I have a question. May I, Belinda?
Yeah, feel free to go
All
ahead.
right. Well, I mean, on the demo, you're showing that you can like buy some Aura and all that. Where will you source the list of tokens? Is it going to be like an application process to get listed, or like what do you plan?
Yeah, so as of now, we've integrated the CoinGecko API, but we're going to integrate all the tokens later down the road. So any on-chain token that's available, we'll have it.
That sounds good. Thanks.
Nice. It's great to see presentations during the presentation. I mean, it's a demo day. Nice. Anyone else got a question for Gothia and Ondefy?
I think someone is speaking, but his microphone is off.
Who is that someone?
I can see on my screen. Wait 1 second. It's Faraj. Faraj, I think can't hear you. Yeah.
Yeah, I think Ian have a question.
Right, Ian. Ian actually posted the question in the chat. So he's asking what's the transaction cost and any compliance risks in different regions. Gauthier?
Okay. Yeah, so for the compliance risk, we've integrated RAM providers, so we don't manage this part. For as of now, we integrate Transact, but later down the road, we'll integrate MoonPay or the types of providers. We're mostly a ramp enhancer, and what we take as a fee is an on-chain fee of 1% on all the fiat transactions. And for crypto to crypto, I need to go back, it's 0.5%.
Oh, thank you so much, Gauthier, for the presentation. Nice.
My pleasure.
Nice. Next, we will have Timmy from Furion. Timmy.
Can you see my screen?
Yes.
Yeah, sure. Let's start. Hi, everyone. This is Timmy from Furion. Furion provides two types of service. The first one is NFT fractionalized borrow and lending. The second one is NFT derivative. So let's talk about how to fractionalize. You have two ways. The first way is fully fractionalized. For those diamond hand and don't want to know their ownership of the NFT, we have that second way we call it lock. Just like you can get half value of the fractionalized token, but you need to repay them within 2 months. So fractionalized is just the entry, but we are more focused on how to make use of the token. So the first way is about borrow and lending. Compare BandDAO, ParasPay, and others NFT borrow and lending platform. We are different. They are supply NFT and borrow Ethereum out, but we are not. Users can supply Ethereum, USDC, or fractionalized NFT token, or they can borrow the ETH USDT and fractionalized token. So there's a lot of benefits in fractionalized NFT borrow and lending. The first one is the liquidations. So in BandDAO, there's always a crash, or when in the bear market, they need a lot of the Ethereum to liquidate. But for us, this is easy to liquidate because the amount to need the Ethereum is large degrees. The second one is about the leverage. So assume you have one ape, but you just supply and get 40 Ethereum out, and then you cannot buy another ape, but you can do it in Furion. Third, you can short a NFT in borrow and lending. You just supply USDT and borrow some fractionalized token and swap it to USDT. And if the fractionalized token drop, you will earn money. So in overall, we provide more diverse strategy in borrow and lending. We are totally different for others competitors. So because we have a money market, so we also will have a AMM as well. This is X times Y equal to K, and this is in order to lower the entry barriers and high trading efficiency for the users. Yes, but our focus is not on the money market and as well. Why we start this first? Because the market is not mature. Many people want to do or trade in derivative, NFT derivative, but we need to educate our users. So even GMX matures from the last year. So I believe this year's money market is the mainly market in our platform. But we are target to derivatives. So how to do it? We have fractionalized token. Of course, we can form a pool, and just like GML, GLP, and GMX, and we can allow user long and short to the users. In fact, we finished the PVP AMM smart contract in the last year, but we think this is not that good time to public to the users. And so in overall, we will have marketing, we will have our mistress board, avatar, and badge. Let's see. So this is our website. You can see in the board, and we can have different collateral, and you can use the swap functions, and you can have a borrow and lending. And this is our airdrops, and this is very powerful. We already have our first testnet, and we get about 30K address, and 40% address are generated by this referral link. So this is our partnership and others. For the token, we will use ES model to distribute our revenue model. So for the seed round, we already at the end of this month, we will close our seed round. The valuation is 10 million and led by Paramount and Crypto Capital. And we are talking with ABCDE Capital. They are strong interest to us. So we will close close this round in this month and start the next round in the next month. So these are our current investors, and some is not here. So this is our team. We are a team of 10, and most of us are based in Hong Kong. And we are the graduate from HKUST, most of us. And such as Sharding is our CEO. He is graduate a PhD in major in mathematics. So this is our roadmap. We will launch our mainnet in the next quarter, and Q3 we will have a derivative beta test and launch our perpetual futures in the Q4. So this is our advisor boards, and most of them will have every week we have a meeting with them, and they will provide some tokenomic market strategies and others for us. They are strong in NFTFi areas. Yes, this is all our sharing. Thank you.
Great, thank you, Timmy, for the presentation. Furion, anyone got a question for Furion? Feel free to go ahead. Nice. If no one got a question for Furion, we'll move on to the next one. Thank you so much, Timmy, for the presentation. Great. Next, we'll have Stephen from Megashow. Stephen.
Hello. Anyone hear me?
Yes.
Yeah. Just give me I'll share the screen. And I'm the co-founder of this project. Since we have only 5 minutes, I'll do a quick start. So the Megashow is a retail showroom create platform. And what we're gonna do is, before I introduce why we do this, is we give you some background about us. So basically, before we launch this project, we're doing like operating the fashion brand. So during the COVID, we found that there's a problem in this fashion industry. So basically, there will be 4 parts. The first part will be the cost. Usually, the fashion brand, they were facing a high cost of the physical opening, and they also have a problem with customer research, customers reach, and entrepreneurs transformation, and also the experience. And what's our solution? And our solution is to make the customized display. So what's the customized display is usually we create a fully customized virtual showroom to all their goods. And also we do the economic integration and a virtual simulation, and also the innovation and the cost. We also save the cost. Usually, so the brand do the physical showroom, they will usually have a lot of costs on the maybe the place and the time and the staff cost. But if you do a virtual online platform, the cost will be, based on our calculation, will be almost half. And for the market validation, there's a lot of news talking about the Web3 and the virtual room. We think there will be the trends in the future. So we can see like in the Paris Fashion Week, they already start to try to use some online fashion shows. And there's also a lot of virtual fitting rooms in this market. And for the market size, we anticipate that it will be $5.5 billion in by the 2026. And this part, if we have time, I will explain later. So what I want to focus on is the project, is the detail for the product. So what we do is, so in the short term, we're going to make the platform to the business part. The business part will based on they can have the right to create their own art shows. They have their own virtual retail stores, as we can see. So let me zoom in. So there's some details. So actually, as a brand operator, you have the choice to like create the furniture in a art show, and how to design your art show. It's all like online things will be very convenient. And you can also create your own statues and the styles in your showroom. And usually we will start from a virtual commerce space. Usually will be separated into different stores. And also you can create your own individual stores. So for the customers, in the long run, we eventually want to reach the customers. So we will have the features like all the customers, they can select a showroom and store, and they will browse the product. And in the fitting room, they can try the product in the store. Like they can drag for example, the t-shirts to their bodies. They will create a 3D model, which is based on the customer's body figure. And our strategic plan is we not only just want to show, so the show will be our first step. Finally, our ambition is to create a word about the fashion, and a word customers can do shoppings, and they will have the entertainment, even they can social in a world. And the business model, so in the short term, we will focus on the sales and the exhibitor. Usually it's virtual stores and startups and the digital shows. So in the long run, we will more focus on the buyers. So how to make them the online shopping, to change their habit in online shopping, and do the fashion and art retail, even for the art pieces. And for competitions, what we gonna focus on is to combine the physical products and the meta. So we want to do the bridge to connect the virtual world and the physical world. So our advantages is we have like immersive experience. All our team members, we have a strong experience in a fashion brand, and we have the limits in the reality and e-commerce integration, and we do have the team to support us do the data analyze. And one of the best feature we think we have is for the customers is the virtual fitting. Will be used to help people to do the online shopping.
Great, thank you so much, Stephen, for sharing. Megashow, nice. Last project for today. Anyone got questions for Megashow? Great, everyone. Thank you so much for
Belinda.
Oh.
I'm sorry to jump in. I believe that UCO network has been forgotten.
Sorry. UCO network.
Yes.
Actually, I don't think it's included in our demo day. So maybe you can double check with our team member. Because we do invite only on this.
Invitation has been received, but I'll leave that to you. No problem.
No problem. We will double check, and then maybe we can include you guys in the next demo day if we make a mistake. Yeah, because in our like pamphlet, it's only 15 projects. Thank you so much. Great. All right. I'll just do a very quick ending. Thank you everyone for staying us until the last minute. Really good job. I hope you find this demo day helpful and hopefully also very inspirational on whatever you're doing. And feel free to do a shout out for Sharding Capital and Shard Dubai on your Twitter if you want. Our next demo day is scheduled on 13th. Inshallah, we can make it. And the offline demo day, which is definitely happening, is on March 17th in Dubai. So we'll have like over 30, even 50, like nowadays more and more people are applying, like regional VCs and global VCs attending. And we also have government like regulators, like Dubai Blockchain Center, Abu Dhabi Global Market, etc. And then DMCC, they are coming to the event, and some of them are actually sponsoring, like providing rewards for some of the presenting projects on that day. So it's quite exciting. So hopefully everyone can make it to Dubai on that day. We're happy to host everyone. Yeah, so feel free to join the Shard Dubai VC audience, so it's easier for you to know what's going on instead of checking your emails and stuff. We got so many random DMs, and then later on, I think people will be asking like, oh, why the demo day is finished, halas, something like that. Okay, great. Thank you so much, everyone. And well, let's call this a day. This is a wrap. Thank you so much. And good morning, good evening, good good night. Yeah, thank you so much. Bye. Take care.
Bye, everybody. Thank you, Belinda.
Bye, everyone. Thank you so much.
Bye bye.
Bye.
Bye bye, Belinda.
Thanks, Belinda.
Guys, it was nice.
Thanks, Belinda. Bye.
Thank
Bye
you,
bye.
everyone.
Bye bye.
Thanks a lot. Bye bye.
Ciao, ciao.